everybody. Michael Reeder, CPA here, managing shareholder of Swartz and Reeder Advisors, a CPA firm for the franchise industry and working with business buyers, franchisees. And today's episode is all about my process of the CPA consultation call that I provide franchise buyers all across the country. So, okay, if you know me, you know that I am an entrepreneurial CPA. I am a business owner myself. I now own the CPA firm that hired me out of college. I acquired two smaller CPA firms over the years and merged them into my book of business. And I am a CPA trusted advisor and business strategist for several small business owners all across the country. Our firm, Swartz and Reeder Advisors, physically located in the greater Chicago area, but we're really a virtual CPA firm. We have clients all over the country. I have team members that work remotely from their house, not only in the greater Chicago area, but also from their house in other regions of the country. And we really are a virtual CPA firm, and we have a niche in the franchise industry and a niche working with business buyers, franchise buyers specifically. But even though we do work with non-franchise business buyers as well, if you're looking at independent resale. And so what my process is as a franchise industry CPA and a CPA working with business buyers is I provide 60 minutes of complimentary CPA consultation time to speak with business buyers to answer any questions they have in the context of accounting, tax, entity structure, funding, financial projections, resale financial statement due diligence, items 7, 19, and 21 of the FDD as it pertains to their prospective business investment, their prospective franchise investment. I have a nationwide network of franchise professionals, whether they are franchise consultants, franchisors, franchisor development groups, and franchise funding companies. And they refer me and my CPA firm their business buying candidates, their franchise buying candidates, and encourage them to take me up on my offer for the 60 minutes of complimentary CPA consultation time. And so I've been doing this for several years now, and I am a great person to talk to if you are buying a business and you have any question in those subject matters that I just discussed. Then I am a great person to talk to when you're going through this very important process. You know, buying a business is a big deal. And sorry, knock that over there. Buying a business is a big deal, and there's lots of important things to talk about with me as a franchise industry CPA when going through this process. You know, the franchise that you buy is either the biggest investment you've ever made, or, you know, second to your house, for example. And so there's lots of stuff to unpack. So, you know, today's episode, you know, Swartz and Reeder YouTube channel, click the subscribe button there if you haven't already. You know, got a lot of great content coming out. Today's episode is all about the topics that I discuss with prospective franchise buying candidates on these CPA consultation calls. I'm having these consultation calls with franchise buyers all day, every day, you know, throughout the year, you know, regardless if it's winter, summer, spring, fall. I'm talking with business buyers throughout the year. I love it as an entrepreneurial CPA, working with other entrepreneurs, other business buyers, and you know, and I love just cultivating relationships with these buyers as they go from buyer to actual owner, and to see them, you know, in business and become successful year after year after year. I'm humbled and grateful to be there, to be one of their top, if not their top trusted advisor, helping them through their journey. And so let's unpack the different topics that I talk about on these consultation calls with buyers. So the most commonly discussed topics on these consultation calls are entity structure strategy and funding strategy. So, hey, Mike, you know, I'm buying a business. How should I structure it? Should it be an S Corp, an LLC, a C Corp, a ROBS C Corp? Rob's rollover as business startup. It's like a self-directed 401k. It's a very niche structure that's very prevalent in the franchise industry. And then how should I fund it? Should I fund it with an SBA loan, with a home equity line of credit, with a securities-backed line of credit, with my retirement funds? There's lots to unpack there. And so, so let's do exactly that right now on this episode in real time. We're going to unpack that. So, I always talk with, everyone's situation is different, like entity structure strategy and funding strategy, right? Like, let's dive into this like right now, because this is really the meat and potatoes of these CPA consultation calls that I have with franchise buying candidates. Okay. So everyone's situation is different. Like, I cannot emphasize that enough. Everyone's situation is different. Okay. And so, you may be looking to buy a business and you may know someone else in your network who's buying a business. And for them, they're going Rob's C Corp, which is a C Corp that is used with retirement funds to fund their business investment and operation. And that might work for someone, but it might not work for everyone. For other people, an LLC or an SBA loan, or maybe a Rob's C Corp with an SBA loan, or an S Corporation. There's so many different things. So when I am talking with a buyer and the inevitable subject of entity structure and funding strategy comes up, I always get context on 3 different buckets, right? So bucket number one, what is your investment level? Is it, are you doing a home-based service business where your investment level is going to be $150,000, $200,000, and that's really comprised of franchise fee and working capital? Or are you doing a retail build out that's going to have commercial space and your overall investment, is $500,000 plus, and it's going to include build out and furniture and equipment and machinery and vehicles and franchise fee and working capital? So what's your investment? Bucket number 1. Okay. Bucket number 2 is, what is the allocation of assets on your personal financial statement? You, the buyer, what do you have in cash? Okay. What do you have in other liquidity, right? So what is other liquidity, right? Other liquidity is not cash, right? Because cash is cash, right? And other liquidity is also, it's not retirement, right? So it's non-qualified liquidity. So we're talking investment accounts, like brokerage accounts. What do you have in your non-qualified investment account? So other liquidity. Okay. And then what do you have in retirement, right? What is the value, you and potentially your spouse, go bucket by bucket. What do you have in, your current 401k, any old 401ks, your current, like, what do you have in your IRA, or do you have like multiple IRAs? What do you have in, what does your spouse have in those same buckets? 401ks, whether they're current employer or old employers, or any IRAs. What sort of Roth retirement assets do you have? Okay, and then so real estate. So going away from retirement now. So we're going down the line, right? We've got cash, other liquidity, and we've got retirement, in all the different buckets, or 401ks, IRAs, whether they're thrift savings plans, whether there's some sort of pension with a cash value. What do you have in real estate, right? Like, what's your primary residence, right? Value and principal balance of the mortgage. And then same, right? Value and principal balance in the mortgage for second home, vacation home, investment properties. What do you have in real estate? What do you have in non-liquid? What do you have in non-liquid, other assets that are non-liquid? For example, you may have restricted stock units that you have, but they're not going to vest until like you want 1 or 2 or 3 years down the road. Or you may have an investment in in some sort of REIT, some sort of real estate investment trust, or a Delaware statutory trust. You may have something that's of value, but it's illiquid. But still, what is it? What do you have as any sort of cash value life insurance? These are all important when determining how to go about entity structure and funding strategy, because your allocation of assets on your personal financial statement will determine what different options are available to you in the context of entity structure and funding strategy. So bucket number 1, right? Investment. Bucket number 2, allocation of assets on personal financial statement. Bucket number 3 is household income and expenses, right? Household income and expenses. So are you working, or did you just get laid off? Do you have a spouse? If so, are he or she working, or did they just get laid off, or did they just not work, or do you not have a spouse? Do you have rental income coming into the household from your investment property? So those 3 buckets, and there's a lot to unpack here, and I know that. Those 3 buckets are so important when having the entity structure and funding conversation, because they're all attached at the hip. Okay, so everyone's situation is different. Everyone, I'll talk to a buyer and I'll get context on their 3 buckets, and all 3 buckets are attached to the hip, and they drive that conversation, right? So let's have an example. Okay, so if there is someone that is investing, their investment is going to be a home-based service business, and the all-in investment is going to be $200,000, and that primarily consists of franchise fee and working capital for the first 12 months. Okay, and their allocation, and they've got $100,000 of cash. They've got $250,000 of other liquidity, such as their non-qualified stock portfolios. They've got $500,000 in 401k. They've got $200,000 of equity in real estate, and they are not going to. There's no other income coming into the household. All right, so this is just off the dome, right? Like, this is just an example. In that situation, there's lots of funding options available to them. For example, if their investment is only $200,000, and depending, they may be able to do they may be able to get an SBA loan. Now, one thing with SBA, and you always want to talk to an SBA specialist, an SBA vendor. If you need a referral, let me know. There was a rule pre-COVID that if your liquidity exceeded your investment, then you may be ineligible for SBA funding. But during COVID, they rolled that back. So I'm not so in real time as I leave this, as I'm making this episode, I'm not sure if that's still been rolled back or if it's back in place. So that's definitely something to check. But this buyer here may be able to get an SBA loan. They may be able to they may be able to do a C Corp ROBS, and roll over their retirement into a C Corp and fund the whole thing, or partial it and do an SBA for some of it. They may be able to get a securities-backed line of credit on their non-qualified investment assets. And so commonly security-backed line of credits are approximately 50% of the value of the portfolio. They may be able to get a home equity line of credit. Home equity lines of credit typically are, an appraisal is done and approximately 80% of your home's value, of your home's appraised value. That amount, less any sort of current principal balance on your mortgage, may qualify for a home equity line of credit. But you're going to run into some problems with SBA and home equity line of credit if you're not working. And in this example that I'm doing a freestyle on right now, if there's no income coming into the household, that's going to be a challenge for anything SBA or anything home equity line of credit, because the SBA and the lender, the residential lender, are going to want to see household income coming into the household. So if there's no income coming into the household, those 2 scenarios, right? Home equity line of credit, SBA, are going to be a problem. If there's a spouse that works, then that's going to help. Okay. Or if you currently have a job and you want to buy a business, exact same situation, but you haven't left your job, but you want to leave your job, consider not leaving your job while you get your SBA funding and you ramp up your business, learn the trade, learn the craft of the specific industry that your franchise business is in, learn it for a couple of years, and then leave your job. If you do that, not only are you going to have income coming into the household, you're going to be able to qualify for things such as a home equity line of credit, an SBA loan, and you're also going to learn the job, and really, that's going to help you survive ramp up when you have some cash flow coming into the business. And so, those are really important things to take into consideration. For example, if you have a securities-backed line of credit, any sort of global income may not matter. The the fiduciary, the financial institution holding the portfolio will just give you the line of credit regardless of your income. I mean, and then every financial institution has their own internal guidelines. So that's like a financial institution by financial institution scenario. But if you don't have income, there's always this thing called the ROBS C Corp. Okay, the ROBS C Corp. ROBS is an acronym for rollover as business startup. Okay, and it's a way for you to use your retirement funds to invest in your business. And how it works is you get a C corporation set up. Okay, a C corporation is set up, and the C corporation is going to get its own retirement plan. And that retirement plan is going to own the majority, if not all, of the shares of the C corporation stock. And so what happens is you're gonna get the C Corp set up, and then the retirement plan set up. And there are vendors out there that specialize in ROBS structures. So if you need a referral to a ROBS vendor, please let me know. I have a great relationship with them. And what happens is once the C Corp is set up along with the C Corp's retirement plan, you're going to roll money in from your old retirement accounts, whether it's an old 401k or an old IRA. Remember, you cannot roll over anything from your existing job's 401k. You're going to have to leave there before you do it. You're going to roll it over into the new C Corp's retirement plan. And then once it's there, that's what's called the rollover. Then once it's in the new C Corp's retirement plan, it's going to invest in the stock of the C Corp. So that's called the capitalization of the business, when the actual money from the retirement plan of the C Corp finds its way into the checking account of the C Corporation. Once it's there, it can be used to pay the franchise fee, to buy the business, and to commence business operations. And so the ROBS C Corporation could be a way for you to self-fund the business with no debt, using all of your retirement, funding it all with retirement money, with retirement equity, instead of any third-party debt. And everyone's different, right? Everyone's different. There are people that when they hear the word debt, they get scared, rightfully so, right? But there are also people who are adverse to putting their retirement assets at risk. Okay, so everyone's different. People have different appetites for risk. People are uncomfortable losing their nest egg, which is an argument against ROBS. People are uncomfortable taking on debt, which is an argument against SBA or home equity line of credit or securities-backed line of credit. Everyone's different. And so, and there are other ways that you can use retirement funds for your business other than the ROBS C Corp. You could do a 401k loan, which allows you to borrow the lesser of $50,000 or 50% of plan assets. So you may be able to do a $50,000 401k loan from your current employer's 401k, or you can set up an entity, whether it is a C Corp or whether it's a ROBS C Corp or an LLC or an S Corp, and have a retirement plan for it. And you can roll over 100 and borrow out 50, because remember, a 401k loan is the lesser of 50,000 or 50% of plan assets. And so in order to borrow 50, you need to have 100 in the plan where you're borrowing it from. And this is something that's, it's, again, everything is case by case, but when talking about retirement money, you always have to do a feasibility analysis on, well, what about if I just take an early distribution from my existing 401k or IRA, and I, depending on my age, I take the tax and the 10% penalty. It doesn't make sense in a lot of situations to do that, because you're going to get hammered in taxes and 10% penalty. But in some situations, it might make sense, and we can unpack that on future episodes. As I do solo episodes like I'm doing today, and if I have guests on that we're talking about this, so I'm going to have ROBS vendors on, people. I'm going to have SBA vendors on. I'm going to have professionals in all different walks of financial professional service on the Swartz and Reader Advisors YouTube channel. So click that subscribe button. There's going to be so much great content coming. But I mean, I'm just scratching the surface, people. Like, I am just scratching the surface of like how in depth I get on these CPA. And you see, I talk fast. I'm from Chicago. All right, remember that. I'm from Chicago. I talk fast. So if you're from like New York or Chicago, this is all good right now. And if you're from anywhere else, your head's probably spinning. So I apologize in advance. But I'm unpacking a lot of stuff on these CPA consultation calls with buyers, because I'm committed to providing so much value to you. I am committed to providing so much value to you. And if you want to work together in a paid context with me and my firm, after the complimentary CPA time, after the complimentary CPA consultation time, that's always a conversation I can have with you and your spouse at your convenience. And if not, my feelings won't be hurt. That's not going to, because I'm providing value to not only you, the buyer, but I'm also providing value to my nationwide network of referral partners, of my network of franchise consultants, franchisors, franchisor development groups, and franchise funding companies. But this is the stuff that we're unpacking on these calls. Entity, and like I'm dominating this episode. I started out talking about because we do talk about the different types of tax and like flow through taxation if you're an S corp or an LLC or a sole prop versus C corp taxation, how C corp stands alone, right? And then accelerated depreciation depending on the industry, depending on what's being purchased as part of that overall initial investment. Flow through taxation if you have a loss from the accelerated depreciation of hard assets combined with ramp up, if that flows over to your individual tax return, if you're an LLC or an S corp partnership, and you and or your spouse bring 6 figures onto your 1040, that flow through loss can really help you on your individual tax return. And if you go rob C corp and you have a loss, right, and you have 6-figure income on your 1040, that loss over here at the C corp is not going to be able to pass through to your 1040 and offset the income over here. And then so these are all the things that we take in consideration, that I take into consideration with buyers that I talk to all day, every day. And there's a lot here. Buying a business is a big deal, and your entity structure and funding strategy, you're not going to find a deeper dive conversation, a deeper dive holistic analysis of entity structure strategy and funding strategy than you're going to when you talk with me on these complimentary CPA consultation calls, because there's pros and cons to everything. There's pros and cons to everything, and everything is unique. Everything is unique to your situation as the buyer, because the combination of your, right, bucket 1, investment, bucket 2, allocation of assets on your personal financial statement, and 3, your household income and expenses, all of those 3 and how they're connected with each other are unique to you. And they're going to drive the entity structure and the funding conversation when it comes to what should my entity structure be for my new franchise, and and how should I fund my franchise. If you're talking to your neighbor or someone in your network that they did it a certain way, that doesn't mean it's going to work for you. You don't know how big their investment is. And people, and like they may say it's, but you also don't know what you may know what their investment is. If they're doing a certain brand, you may know what their investment is, but you don't know what their allocation of assets are in their personal financial statement. You don't know how much they have in retirement. You don't know how much they have in cash. You don't know how much they have in equity in their house or other real estate. And also, you don't know if they've got, maybe they have an inherited RM, like they have an inherited IRA that they're taking required minimum distributions of $100,000 a year from, that they're not telling anyone, like you never know. Like, so just because someone else in your ecosystem says that they did an S corp or they did a Rob C corp, and that's the way that you got to do it, just understand, like, consider the source of everything, like what makes sense for them may not make sense for you. And understand that when it comes to entity structure and funding strategy for your business, that it's unique to you and your 3 buckets. What's your investment? What's your allocation of assets on your personal financial statement? And what's your household income and expense situation look like? Because it may be for you, the best thing to do is an LLC with an SBA loan, or maybe it is a Rob C corp, right? Or maybe it is an LLC with a securities-backed line of credit, and so on and so on and so on. There's so much. And if you are buying a business, right? Like, my niche is franchise, but I also work with independent resales, people that are buying independent non-franchise resale business, right? So if you're buying a business, franchise or independent, and you want, and I'm talking small business here, I'm talking Main Street, not Wall Street. Okay. Like, I don't deal in the space of like the big mergers between like the multi-billion-dollar companies. Maybe I'm dumb for, but maybe I'm dumb for not, like, maybe that's where the real money is. Like, but I'm Main Street people. I'm Main Street. I'm working with small businesses. And I'm proud of it. I'm a small business owner too. If you are buying a business, franchise or independent, and you want to have a deep dive conversation about how you should structure your entity and how you should fund your entity, reach out to me. Subscribe to the YouTube channel. Reach out to me. You can go to our website, Swartz and Reader, swartzandreader.com, swartzreader.com, URL right there. You can email me, call me, text me, schedule a call. My team will schedule a call between you and me, and let's dive deep, because it is a unique and customized conversation to you. It's a unique and customized conversation to you. And so to see, we have to weigh we have to take everything into consideration, and we will. And I've got there's like we talk about on these CPA consultation calls, entity structure, strategy, and funding strategy, and how taxes plays a role into that's like what dominates the consultation calls often. But we also talk about the importance of your accounting internal control and the difference between accounting setup and optimization, and then ongoing bookkeeping. We talk about financial projections. We talk about items certain financial related items in the franchise disclosure document. We talk, if you're looking at a resale, we talk about, buy side due diligence, looking at the seller's financial statements. So there's so much to unpack. Like, I'm unpacking so much on these calls. And I talk fast, again, not only because I'm from Chicago, but also because I'm trying to get as much value in the 60 minutes as possible. And so reach out to me, schedule a call, hit that subscribe button. Swartz and Reader Advisors, a CPA firm with a niche in the franchise industry and working with business buyers. My name is Michael Reader. I am an entrepreneurial CPA, and I am here for you. If you're buying a business, we got to talk, because there's lots to unpack when it comes to entity structure and funding strategy and so much more. And I would love to have a complimentary CPA consultation call with you, and I would love to provide value to you. I'm rooting for your success, and thank you so much for checking out the Swartz and Reader Advisors YouTube channel. Lots more content coming. But that's all for today's episode. You can I can keep going on, but there's so much on this topic, and and really what I'm talking about in these episodes are the things that we're talking about on these complimentary CPA consultation calls. So shout out to my nationwide network of franchise professionals out there. Shout out to all of my business buyers out there, existing clients, people that I talked to that ended up, they wanted to work with a local CPA. God bless them. Shout out to everyone out there, shout out to America, shout out to the entrepreneurial spirit, shout out to, just American innovation, shout out to entrepreneurship, shout out to just, business ownership, self-employment. I'm all about it, and I'm here to provide massive amounts of value to you if you're about that too. So reach out to me and let's talk. All right, everyone. So long for now. Michael Reader signing off.